Hello everyone. Welcome to the virtual class of IFRS, International Financial Reporting Standards. In a previous session, I have discussed points to be covered under this topic and emergence of IFRS. Today, in this session, I would like to discuss two important topics that is covered under our syllabus: introduction and meaning of IFRS, International Financial Reporting Standards. As you all know that we are now working in global village, or you can say now we are in a globalization. This is the 30th year from 1991 to 2021 after the policy of LPG, liberalization, privatization and globalization. Now we are not working within the boundaries of India. Now our corporate houses are working at different countries of the world. Our corporate houses have explored new horizon as far as business excellence is concerned. And we all know that economic development of the world is based on globalization and liberalization. Economic development of any country leads to the requirement of a sound accounting system and a system for financial reporting. Reporting is a must because whatever we are doing, if we fail to report to the concerned stakeholders, how do they come to know that what is our working system? Whatever the goals we have achieved, how do we convey our success to them? It is very much difficult for an organization to convey the success to the other stakeholders in absence of sound accounting system or sound reporting system. So this globalization, privatization and liberalization have opened the doors for the different countries of the world as far as expansion of business is concerned. And in this situation, we are working in such a way so and improve our system, we can improve our business excellence, we can justify, we can satisfy all concerned stakeholders. There is a requirement of good governance, quality standards, and a sound regulatory framework. When a country adopts globalization, it has to maintain the system of financial reporting in parity with the other countries of the world. It means that we have to maintain good governance. It is all about transparency in accounting system, transparency in financial reporting system. As I discussed in a previous lecture, that for the purpose of any business decision, we are in need of comparability. And comparability is possible when the financial reporting or accounting system is working with the same parity. It means we are in need of some common rules and regulations, some general principles that is applicable to all. Because when we are working at a global level, if we are preparing anything without following general rules and regulations or common goal, common rules and regulations, common informations, it is very much difficult for an unknown person or a common man, or you can say a layman, to understand the account prepared by a corporate house. In this situation, if you want to work at a global level, if you want to justify the provisions of good governance, transparency, if you want to maintain some quality standards, it is necessary for a corporate house to have some regulatory framework as far as preparation of the accounting and preparation of financial reports are concerned. Because if all corporate houses have prepared their accounts without following common rules and regulations, it is very much difficult to prepare the accounts in such a way so as they can be easily comparable with each other. That is why we are in need of an element in accounting system and preparation of the financial reporting. It is known as a uniformity. Uniformity leads to us for some general rules and regulations, generally accepted accounting principles, and some common framework that can be adopted by each and every organizations working in the country, so as it should be easily understandable. We have three different principles for good financial reporting: understandability, uniformity, and third, it should be just to recall what I have discussed with you, comparability is also one of the important aspect as far as accounting aspects are concerned. It means for the purpose of maintaining good governance, prescribed quality standards, and sound regulatory framework, we are in need of some common principles. And these common principles are playing an important role. IFRS is one of them. IFRS is short form for International Financial Reporting Standards. It is also known as acronym. It is made from four letters. I stands for international, F stands for financial, R stands for reporting, and S stands for standards. IFRS is the international accounting framework within which to properly organize and report financial information. As you all know that it is international accounting framework. Some rules and regulations are pre-designed by International Accounting Standard Board for IFRS. Each and every company working at the global platform are required to use these pre-decided common standards, these pre-decided framework at the time of preparation of the accounting and financial statements. Because if common rules and regulations are there, if a common framework is there, it is very easy for the concerned stakeholder to understand the things very easily. These kind of financial statements are used for the purpose of comparison and to take financial decisions if it is required. So, it is the international accounting framework. It means it is not applicable in India only. These IFRS, International Financial Reporting Standards, are working across the globe, and it is derived from the pronouncement of the London-based International Accounting Standards Board (IASB). It is currently the required accounting framework in more than 120 countries of the world. IFRS requires business to report their financial results and financial position using the same rules. This is one of the most important multiple choice question if you would like to appear for any competitive examination based on commerce and accountancy. It is all about headquarter of IASB, International Accounting Standards Board. So it is clearly mentioned over here that London-based IASB, headquarter of International Accounting Standard Boards, located at London. It is also mentioned over here that as of now, when we are discussing this point on 2nd February 2021, this accounting framework, that is IFRS, is working in more than 120 countries of the world. As I said before a few minutes, that it is not applicable in India only. It is applicable across the globe, and this is the proof that it is applicable across the globe because 120 plus countries have adopted International Financial Reporting Standard as far as preparation and reporting of their financial result is concerned. Even it is clearly mentioned in the last line, this is useful for the preparation and presentation of the financial results and financial position using the same rules that we have discussed earlier. If all the financial statements and financial reports are prepared on same ground, that is based on same rules and regulations, it is very easy for the all concerned stakeholder to analyze the information written in the financial statements. Further, International Accounting Standard Committee, that is IASC, was formed by the accounting fraternity of 10 countries. This committee was responsible for the formulation and issuance of international accounting standards. In 2001, this responsibility was handed over to International Accounting Standards Board, that is IASB. IASB restructured the standards and now they are popularly known as IFRS. This is all about basic development of IFRS. The first and foremost agency working for the common platform of accounting and financial reporting is concerned in the world is known as IASC, International Accounting Standard Committee. And in International Accounting Standard Committee, there were 10 member countries. These accounting standard committee, that is IASC, have framed international accounting standards at initial level. That we all know, because in previous lecture I have discussed about international accounting standards. IASC was basically responsible for the preparation, or say formulation and issuance of international accounting standards. But in 2001, this responsibility was handed over to some other agency, and this agency is known as IASB, International Accounting Standard Board. Now, IASB, International Accounting Standard Board, is responsible for the preparation of IFRS. What the IASB has done? International Accounting Standard Board restructured, reframed the accounting standards prepared by International Accounting Standard Committee, that is IASC, and simply change the rules and regulations in such a way so as it is applicable to each and every member country. Earlier, it was not spreaded across the globe. Very a few countries have adopted rules and regulations because some of the rules and regulations were not matching with the internal requirement of all the member countries. That is why from 2001, the entire responsibility related to this framework handed over to the different agency by IASC. So International Accounting Standard Committee hand over all the responsibilities to IASB, International Accounting Standard Board. And now IASB is developing different standards, rules and regulations, general principles for the presentation and preparation of the accounts and financial reporting with a new name. And name of this general guidelines for different items incorporated in the accounts are popularly referred to as IFRS. Further, International Accounting Reporting Standards, popularly known as IFRS, provides information for economic decision making. It gives importance to preference and changes in the financial position of an entity. An entity means business organization as far as our topic is concerned. Here we have to evaluate financial position of a business organization, or you can say an entity. Specifically, when we have to take economic decision, means the decision which is based on financial aspects. If you want to take any decision which is not connected to any economic side or which is not connected with the financial matter of any concern, you are not in need of studying the financial reports. But if you want to take any kind of financial decision, any kind of economic decision, it is necessary for you to overview the financial reports prepared by the concerned entity. So IFRS provides information for economic decision making, and it gives importance to preference and changes in the financial position of an entity. Preference and changes. Business organization is working in an open environment where so many factors are affecting to the performance of the business. Very precisely, we can say pastel, political factor, economical factor, social factor, technological factor, environmental factor, and legal factors. These all factors have significant impact on the performance of the business, and ultimately these changes reflect in terms of financial performance, because at the end of the day, whatever the changes that takes place, whether it's a positive or negative, reflects in financial statements of an organization. Now, understand the most important part as far as our country is concerned. In India, the Institute of Chartered Accountants of India, popularly known as ICAI, Institute of Chartered Accountants of India, holds the responsibility of formulating the accounting standards. When India is entering into the scenario of a global village, it becomes compulsory for us to adopt the reporting system which is in convergence with the reporting system adopted by the other countries of the world. Here, the story of the India is given. Earlier, in India, accounting standards were developed and published by ICAI, Institute of Chartered Accountants of India, in liaising with the International Accounting Standard Committee. On the basis of the International Accounting Standards published by International Accounting Standard Board, ICAI have framed accounting standards for the local level, that is for India. But now India is entering into the scenario of a global village. That is the formula Vasudhaiva Kutumbakam. Whole universe is my family. If whole universe is your family, your business is explored without any kind of boundaries of the nation. So, in today's scenario, you may have some examples of the corporates working in so many countries, and so many big corporate houses of India explore their business throughout the countries. Even they have international branches, they have international stakeholders, even they have collected fund from the other countries. Now, if you are working at a global platform, it is necessary, in fact, it is a compulsory for us to adopt the reporting system which is in a convergence. Convergence means in line with, in tune with the reporting system adopted by the other countries of the world. It means now we cannot prepare our accounts at our own. We have to prepare our accounts which is a matching with the other countries of the world. So IFRS is working nowadays in India as far as financial reporting is concerned. The financial reporting standards that we are using in India have to be in compliance with the global financial reporting standards. This is all about that I have discussed just before a few minutes. Now we are using financial reporting standards which is in compliance with the global financial reporting standards. It means whatever the reporting standards we have prepared and we are using as far as reporting and presentation is concerned, now these all accounting standards are prepared in such a way so as we can put it to the global level because these all standards have same features as it is applicable to the global financial reporting standards. Now, what is the meaning of IFRS? International Financial Reporting Standards are a set of accounting standards developed by the International Accounting Standard Board, that is IASB, that is becoming the global standard for the preparation of public company financial statements. Second meaning of IFRS. The International Financial Reporting Standards are accounting standards that are issued by the International Accounting Standard Board with the objective of providing a common accounting language. The most important word, a common accounting language, to increase transparency in the presentation of financial information. As discussed earlier, this is nothing more than a set of rules and regulations designed and published by International Accounting Standard Boards so as we can put our accounts at global platform without making any kind of major changes. The ultimate objectives of International Financial Reporting Standards are providing a common accounting language to increase the transparency. And in business, transparency is everything, because your all concerned stakeholders are ultimately interested in their own interested items. They are connected for their own materialistic interest in the financial statement. And if your accounts are prepared in a transparent way, means without hiding, without concealing something, it is very easy for a common man, a layman, to understand the accounts very easily. Here we don't want to put any kind of misleading information. We don't want to put any information in financial statements so as they cannot understand. Our objective is to prepare the accounts in a most easiest way so as everyone who is using our financial reports can be able to understand our accounts very properly. And that is why these set of accounting standards, say common principles, say rules and regulations, have been developed by IASB, International Accounting Standard Board. Let us move to the definition of IFRS. IFRS can be defined as guidelines and rules set by the International Accounting Standard Board, IASB, that companies and organizations can follow when compiling financial statements. The creation of international standards allows investors, organizations, and governments to compare the IFRS supported financial statements with great ease. The International Financial Reporting Standards were previously called the International Accounting Standards, IAS. If you read the definition of IFRS, it should be clear to your mindset that this is nothing more than guidelines provided by International Accounting Standard Board, that is IASB. in such a way so as the accounts prepared by any organization can be helpful to the investors, organizations, government, and all other concerned stakeholders to compare the IFRS supported financial statement with great ease. Means without any kind of technical difficulties, they can easily understand and compare the financial reports. The international financial reporting standards were previously called the International Accounting Standards. This is nothing more than restructured or the new version of International Accounting Standards. In the beginning of the lecture, I have discussed that International Accounting Standard Committee hand over the entire power to International Accounting Standard Board in the year 2001. So before introduction of IFRS, International Financial Reporting Standards, all these standards were popularly known as International Accounting Standards. So now International Accounting Standards have been restructured, reframed, or you can say renamed as International Financial Reporting Standards. So it is all about introduction, meaning, and definition of IFRS. I hope everybody is clear with this discussion. Keep watching the next sessions. Thank you.